Hi, my name is Jeff Mandel. I'm the President and the CEO of the iQual Corporation and the ApprovalGUARD service. I'm here to present you a quick credit tip. So your client is finally ready to buy their new home. You both want to ensure that they can qualify for the respective mortgage and qualify for better interest rates. They ask you what can they do to adequately prepare. One key category for them to quickly evaluate is their credit cards. You can ask them if they know the answers to each of the following and if these situations apply. Do they know how many credit cards they have? Do they have over 5 credit cards? Do they know the interest rates on each card, and are any of those interest rates above 10%? Do they know their credit card limits and how much of these limits they actually use or maintain each month? If either they don't know any of these answers, or if the applicable situations apply, there may be a good opportunity to improve their credit profile. Now, while 1 in 7 Americans have at least 10 credit cards, the average stands at about 4 credit cards for every consumer in the United States, according to a report from Experian. So what is the right number of credit cards a consumer should maintain to best manage and optimize their overall credit profile? The answer isn't simple. It's not the number of cards you have, but how you actually manage those cards. As an example, there's 2 different consumers, Ray and Rachel. They both have an identical credit card. Both cards have been open for 2 years and have a 14.25% interest rate, and their credit card limit is $4,000. So let's look at Rachel. Rachel utilizes her credit card each month and does not allow her balance to ever exceed more than 30% of her credit line. She pays no less than the minimum payment and adds extra money each month to pay down the balance whenever it gets close to $1,200. Now, Ray, on the other hand, often maintains a credit card balance around $3,900, which is about 98% of his credit card limit. Both consumers pay all their bills on time each month. However, because Ray is regularly maxing out his credit card limit, he's actually negatively impacting his credit score. Ray's overall credit profile would be better served spreading the $3,900 in monthly charges over 2 or 3 credit cards and maintaining those card limits at or below the 30% threshold like Rachel. The reality is that you can have excellent credit with one well-managed credit card. As was illustrated with Rachel and Ray, the key is how you manage that credit. However, more credit cards can be helpful in cases such as Ray's for emergency or backup reasons. The makeup of a credit score is based on how you pay or your payment history, which is 35% of your credit score, on the amounts you owe compared to the available credit, which is 30% of your credit score, on the length of your credit history, which is 15% of your credit score, on newly established credit, which is 10% of your score, and finally, on the types of credit you use, which is 10%. Having credit cards and buying power when you need it is not only important, but convenient. Additionally, well-managed credit cards will buy you long-term dividends in the way of a better credit score that can potentially lead to lower interest rates and better terms when applying for either a new home loan, an auto loan, or even getting new insurance. The key is to think carefully about adding new credit cards and how you plan on using them. So here are 3 simple tips for credit cards. The first, pay all your credit cards on or before the due date every month. Second, keep the balances on your credit cards at or below 30 to 35% of the approved credit limit. And third, add new credit cards only when necessary to improve your cost, where you can improve your interest rates or to more effectively manage your credit profile. In conclusion, it's really important to understand how credit cards really work and how you can use them to your advantage without hurting your credit profile. Let me tell you a little bit about the iQual Corporation. We provide advanced credit monitoring and advisory services that are focused on your customers' financial literacy and wellness through our branded solution, ApprovalGUARD. ApprovalGUARD helps your customers understand, evaluate, monitor, and optimize their entire credit profile, leading to improved credit profiles and credit scores of your customers, and ultimately helping them reduce their monthly interest expenses. You can learn more at www.ApprovalGUARD.com.